Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for the weekend, and we're now on February 12th, 2021. All right, your weekend edition, we look at the weekly charts. We try to get the weekly picture of longer term. There's a lot of trading that is done over this. And this type of chart action is for that person that isn't looking for necessarily the more active type of trade roll. But remember, the weekly chart is made up of the daily charts. So you've got to play the two with each other. As for the weekend, remember that we've got President's Day, so you get that abbreviated type of trading session, Sunday through Monday. We close at noon, then we reopen typically at 5 o'clock, get back into our sessions, and of course, what do you do with the stock market, which a lot of them aren't, in the U.S. at least, nothing going on. So we can see that another good up day in stocks. They came back late in the day. Gold down to the expense of silver, which closed sharply higher against the gold market. Copper market sitting here, having trouble getting through the 380 level. The lunar holiday has begun. We're also looking over the weekend that we might see as early as Sunday, maybe the end of the trial of President Trump. Hard to say, but to me it looks like everything's just about wrapped up. The defense used, 3 hours of the 16th to defend the president. They said there's no case, there's nothing basically to defend. When you take a look at the dollar index, up a little bit against the currencies, and again the crude took off. Now, if you're a morning subscriber of mine, I was telling my traders this morning at 5:40, go. Look for this market. It's ready to pop. I thought it was. And as it turned out, it was one of those days. But you'd have to be a subscriber to know that. A little enticement there. On the monthly chart of the S&P, what can I tell you? Here we are at February 12th. The market is up 6% for the month. I'm not used to saying this because I remember, a yearly gain of 6% looked phenomenal for returns. And now you're talking in a month you're up, and it's a half month, you're up that much. But as you can see on the chart, it's an up thrust that hasn't let go. What about the weekly chart? You're up 1.31%, a new all-time high close, which in essence means for every short that is in this market, you finished off on the week at 39.31. The only people that have a profit are those that are short between 39.36 and 39.31. Everybody underneath it, they're with a loss in this market. As you take a look at the chart action, I like what I see. And the reason is, here is a market that had a thrust to the upside. Now, if we come back a little bit here, very important, we take a look at the high of this week, 38.59.75. The next week, we had a pattern where you had a higher high, a lower low, you closed lower. One of the rules that I teach in my charting course, and one of the rules I'm going to do with an enhanced version of it. In fact, I didn't even touch on it in the charting course as much as I now do. And I don't know. This became to me pretty evident recently. Doesn't mean I'm always right, by the way, in my analysis. But if you take out the high of an outside week down, it's a trap. Because you've caught the people from that high to low, and once you take it out, it's a thrust the other way. So when the market did that, like you are right there, and that's what we did the week of Feb 12th, now you've caught those people. Just a little bit to learn about, and there are ways that I use on the daily chart primarily as to where that market might head. And again, that'll be one of the enhanced courses that I'm right now creating for people that have taken the real course. All right, so we catch a group here. That's my opinion. The market thrusting to the upside. You're over the 18-day average, which is over the 100, which is over the 200, still in a bullish mode. The bias is defined on a weekly chart is the relation of price to the 18-week moving average of closes. It has stayed over it. It is not uncommon that when you get up to a certain level, and we'll put on Bollinger Bands in a minute, but you dive down trying to regroup at that, what I call line in the sand. Let's put on the Bollinger Bands. Boom, boom. You can see what they do. They hold back the market. That's the purpose. It's an algorithm designed to keep the market trading within them 95% of the time, which is almost like getting on the phone and saying, hey guys, at 39.90.50, There's a resistance point in the market, wherever that's going to come in. Got it? The idea is you're going to stay within the bands 95% of the time. It's the high percentile. So if the market comes down, looks for the support, you look for it to come up. Then there's a filter on all this, which throws away the swing line. You heard me. Throws it away when you have an embedded reading. Embedded means you have taken the momentum of the market, converted it, in the case of bullish embedded, converted it from overbought to locking it in, and it stays that way until the red line, which is called a K line, there's a K and a D line, closes back under 79. I used to say 80, but it's really a 79 number. That's one of the modifications that I'm making. So barring that, I'm still looking for basically higher prices in the market. What would take me out of the market is that. In the NASDAQ, what did we have? We have a market here that's different. We have an outside week up last week that is following through right now. We didn't have that same pattern here. What we did have, though, was a pattern where, and this is fun to always show, we had an outside week up. Let's reverse the pattern. If you take out the low of that right there, right here, what is that low? 27 and a quarter. What is the low here? 27.27. You did not take it out. You come back, you're still very much in that whole pattern going up with the embedded reading. I'm looking for the upper Bollinger Band. And yes, I think the pros will take money against that Bollinger Band or right against it if they're given the opportunity. In the Dow, the market fell back to the 18-day average, but this is what matters. The slow stochastic. So the pros are, in my opinion, staying in on long positions until that's taken out, looking for that number. This is a much sloppier chart than the other two that I showed you. And this is a pretty clean one. This is the Russell, higher lows, higher highs, just clean as can be. And it keeps telling you if it hits the Bollinger Band, it has trouble staying over it and it pulls back the other way. That does not mean it breaks down. And that's where so many people get confused with a Bollinger Band. They go, oh, it's going to reverse from there. No, that's not what the rules are. The rules are it's going to move to the right-hand side. It may break down. There's other things you look to see that, but it's going to go sideways to higher or sideways to lower, but it doesn't have to break apart. And you've got that right now. The next thing I look at is the 30-year bond. Now, this to me is an area that's very interesting. I think the pros are covering their shorts here. Generally speaking, as a chartist, I throw off the name, I'm not interested in the fundamentals. The combination of a 100-day average and a lower Bollinger Band is a fighting zone. That does not mean that's going to stop the downtrend that's at work. But the easy money's out of the market right there. The market waits to see what's going to happen next. Now, we know that everyone's counting on the economy getting stronger and stronger from COVID vaccines, that the data will come out, and eventually as this all gets behind us and the population gets inoculated, vaccine takes place, we're going to do better. President Biden saying we're going to have 600 million more doses. That was such a large number, and that'll be into the marketplace by April, he's thinking. Well, pretty big numbers, right? So market breaking down. That's that creeping interest rate. When I was on Bloomberg about 3 weeks ago, I wrote an article, actually you record the article for him, it was on TikTok, and I said, creepy interest rates, that's what I called it. And that's what it is. Now, there's a difference here. The very, very short end has a problem, the 2-year. I've been telling my full subscribers, where I write for them during the day, twice daily updates about what's going on with the Treasury that has billions now that they have to put back into the banking system, why the 2-year is cracking down and may even go negative. Yeah, take a look at that curve yield. In the 10-year, well, it's not the same as the 30 in this. You can see that you've got the 100 a long way off, but you keep riding it down, oversold. I do think the pros are lightening up right here. Nothing to get bullish on, but the question is how bearish do you want to be on it? And in the dollar index, when you look at a weekly chart, you've gone from the lower band up to the 18-week average. Now, because you were underneath the 18-week average and in a downtrend, this is a contra-trend rally. Why is it contra-trend? Because the bias is down. So it went there, it's paused. We'll see what the next move is going to be. So many people are bearish the dollar, maybe it's going to continue. You'll have your idea that's going on if you can get up and close over 91.60.5 on a weekly basis. Because then you actually turn, not only do you have the swing line up, you get the bias up and you probably turn the momentum up. This is the failure mode if you're going to keep the longer term trend to the downside. Euro's just the flip-flop of the dollar. It too hasn't gotten up over 120, 197 to say, hey, this has been anything more than a decline in a market that's otherwise bullish. It's got to get up and over that number to say that. To a degree, what turns it more bearish? Getting on a close under 119.60.5. Canadian dollar, as you can see, we have a market here that's got higher lows, higher highs, slipping back ever so small on that. The trend is up, but I don't like that the bias of the market or the momentum is just sort of hanging right here. Japanese yen hit its objective last week. What do you do the first time that you come down and you hit a Bollinger Band? I teach that you cover your shorts at that point, that the market does. I don't know that you will. And that if you hit the upper, same thing. You get out of your longs at that point and you wait for the market to turn. You start judging where's the momentum, where's the trend. Well, the trend is down, but you're in an oversold market. I don't know that you're going to be, you being a generic you, that aggressive on the short side. But if you are, I want to come back to that. Maybe the 18-day average is where that is. In Bitcoin, wow, 26% gain for a week. And as you know, at $50,000, roughly speaking, it seems that the world's decided that this is an asset class all of a sudden. Now, let me see, me included. Was it just 2 years ago that you were saying it's worthless, it's never going to be anything? Well, I still don't think it's going to be anything but a storage of value. But even that may be proven wrong. You know, you got to open your eyes up and be it BlackRock on. People have been buying this and saying yes, and it just keeps going higher. Why? Because those people are buying it and saying it's worth an asset class. Okay. In the Brent versus WTI oil, you're fighting a battle where? Right at the differential of the 18-week moving average of closes. But here you go, a market that's kept its embedded reading, was slipping down, accelerated. Where do you think the pros, I think, are going to step out? 63.49, literally right here. What about in the WTI? I think they did it today. I think that you hit that upper Bollinger Band and they said, I'll take some money off the table in front of this. I don't see that. Nothing's going to grow to the sky here. Do you honestly think you're going to $70 WTI next and 80 right away? Okay. Enjoy yourself. Gasoline has been the weakest link, and that looks pretty good still on the weekly chart. The daily chart looks a lot worse than the weekly. This still looks bullish, and when you come and you look at the whole picture, even the natural gas held down a little bit. So as I said, I start off my traders 5:40 in the morning. Actually today, I've been starting recently about 5:15, 5:30. And I've already read what's going on in Asia and Europe. So I'm ready to talk in my recordings about what I'm seeing. And I start off each day with the news. So I'm going to give you what that is. Then I'm going to carry you on charts, over 40 charts with all these ideas, short-term, swing trades, longer term. I do show mostly during the week dailies, but then I revert during them to the weeklies if I think there's something strong there. You can look at all this through our data. Now, just so you'll know, in our handheld devices and in our QT products, I am now beta testing stock quotes that'll be in all those. So be it the ETFs and everything, I'm in the beta version. So I'm actually in the alpha version. I should say this the right way. The beta's ready for release already in different areas. The stocks will be right behind it. When I say we do this quick, we will do it quick. The fact that I'm already getting the stock quotes now is a big change. They got everything hooked up. They told me they'd have it in December. About 6 weeks later that they had to do some work, but it's working and it's working well. So you'll be able to get everything in one area for yourself, and that for us has been a feat. We're primarily a commodity firm, but when I send out notices that things are ready, they come out via our app. Now our app, even if it's just in the back of your phone, it's going to have a push app on it. And it's going to say, Ira's got a special report. His videos are ready to look. Just hit it, it plays instantly. Pretty interesting if you ask me. All right. So that's the other part of all that. So you put it all together, and what do? On the weekends, I also give a weekend video, all right? Now, that weekend's already been published for the spiders and ETFs. I typically do it on Saturday for the futures. I cover all the markets in this exact sequence. If you watch on our website, you can there's a slide bar. You just push it, and wherever you want to go, it just drops you off, and you can watch that. Each video is about 20 minutes long, 6 a week, each in the morning, timely as can be. How do you give it a try? It's really simple. You pop $7.95. It isn't going to break the house. Go to our website. Under the word research, it's right there. www.iraepstein.com under research. I'm Ira Epstein. You can sign up there. I'll see you come. Let's see. It'll probably be Tuesday because of President's Day. Don't be surprised if I wait to do the afternoon wrap-ups then. Take care.